If you're self-employed or a 1099 independent contractor, you may or may not know that getting a mortgage is a bit more challenging because we have to use your net profit. And your net profit is not the same as your gross receipt or gross sales. However, if you're W-2, then we do get to use your gross income. Well, your gross qualifying income, but I've got other videos that explain what that means. So as a business owner, should you just start paying yourself a W-2 type wage? You can, but it won't make any difference. Many people don't realize that when your loan is in underwriting, part of the process is verifying who your employer is. So if your employer is you, then you're going to have to go by the standard self-employment guidelines. And in a nutshell, 2 years worth of tax returns are going to be required, and then your net profit is going to be averaged over a 2-year period. There are some add backs we get to add, but that's what we use to qualify you. And I can tell you from learning the hard way that it will be found out. I had a situation where a borrower only provided me W-2s and pay stubs and all looked great. He did not check the self-employment box on the application, which you do have to disclose if you are self-employed. And guess what? It was discovered that he in fact was the owner of this company. When you're a W-2 employee, we don't need your tax returns in many cases. Well, it was discovered that he in fact owned the company, and then we did need the tax returns. Fortunately, it worked out. Fortunately, he claimed enough money to still qualify for the loan, but oh my gosh, talk about a last-minute panic attack. Not to mention the fact that he thought he could pull one over and didn't disclose that he owned the company. In fact, flat out said he did not own the company, so, there's that.